And joining me now to talk more about the new offerings is Kevin Kelly. He's the CEO of Kelly Intelligence and portfolio manager of DailyDelta ETFs. It's great to have you.
Thanks for having me.
Absolutely. So let's talk about this launch. Tell us more about why it's so significant and important to the broader market.
Yeah, one of the most significant aspects is that there's no ETFs out there that are long zero DTE options on the call or put side. So we're launching a long call or a long put ETFs, and they're really meant to be tools for hedgers and speculators, so especially for market moving events. So Nvidia is in the news today, right? So if Nvidia starts moving the markets, you can use these ETFs to hedge your portfolio or speculate and go long. And what's interesting about them is they're uncapped on the profits and gains that could be had by the options position. So right now, there's only 2 times leverage, 3 times leverage funds, but these funds could actually offer more than that on a daily move, depending on where volatility is.
Can you break that down a little bit more, specifically break down the type of offerings each ETF will offer?
Yeah, so if you look at the upside version we call, so it's Q up, it'll be on the NASDAQ 100 index options. What that will do is it'll own that actual index option, the call, and so that call can have unlimited upside, or you could just lose the options premium. So what's nice is that you don't have to worry about a big significant move on a daily basis if the market goes against you, because it's just the options premium. On the downside, you're just owning the put. So literally it's just a put in the ETF that'll just move whichever way the direction goes of the market.
Would you say that's the biggest differentiator from other competitors currently in the market?
Yeah, so the other competitors in the market right now just sell calls or sell puts to generate options premium. So those are really just to generate yield. This is to get leveraged exposure to the underlying asset, and the underlying asset class in this is the NASDAQ 100 index.
And in other news, Bitcoin, as I mentioned in a lead-in, has fallen to its lowest price seen in 3 months, hitting $90,000 a Bitcoin on Tuesday. What would you say is driving this decline, and what's the message it's sending to the broader crypto market?
Yeah, so there were a couple events that happened in the crypto market. There was a hack on an exchange, which really spooked a lot of people recently, and it was a very big hack. And investors have gotten comfortable right now in exchanges, so that shook a little bit of a confidence in the crypto market in general. And then holistically, if you look at Bitcoin, it's run up significantly since the election. And so it's been normal. If you look at Bitcoin bull markets, there's been 30% pullbacks have been normal in that. It's a historically volatile asset class. If you look at the standard deviation of Bitcoin, it's 77 since 2014, which is significantly high, right? If you look at the VIX to the S&P 500, you're talking about averaging 20, right? So it's a significantly volatile asset class, and so a pullback like this has been normal over the crypto runs. So what I think it's signaling to current investors right now is that it's remained the same, the volatility of this asset class, and it's taking a breather after a giant run-up since the election.
Well, speaking of the election, with this new administration, its impact on the broader cryptocurrency market has been positive, as you mentioned. Where do you see this role shifting over the next near term?
So what I think is going to happen is you're going to see a support from this administration, whether it's through policy, whether it's through regulation, to really foster an environment that's forward thinking. Whether, if you look at the crypto space right now, we've seen significant policy changes and also litigation dropped against Robinhood, against Coinbase. So what I think you're going to see is there's going to be a fostering of development. I think there's going to be new products coming out to help foster, the digital transition. So if we think about people using Ether and coming up with smart contracts, I think that's going to be fostered, especially when in the healthcare space it can help. And if we think about Doge in general, what if you put the entire government ledger on a blockchain, and then you can use cryptocurrency to make it, to validate things, and you could really remove a lot of fraud. So, and that's what this administration is trying to do through their, Department of, Government Efficiency.
But on the other side of this, how is the crypto market responding to market volatility right now?
Yeah, it's actually it's taking profit. So what we're seeing is that the crypto market right now is currently in a pause and consolidation phase. So what you're seeing is this isn't a big significant move in the broad base of how Bitcoin has run. So if you compare Bitcoin to gold, for example, you can see that it's a lot more volatile. And so right now in the crypto market, we're not seeing panic, which you normally see. So you would see a significant turnover in pricing. We haven't seen that. It's been actually relatively muted if you think about the move compared to other moves like the crypto winter from when, FTX blew up and we had November 2021 all the way through the end of 2022. These moves are really muted.
Well, this is definitely a story that we are going to keep following here on the show. Thank you so much, Kevin, for joining us. Kevin Kelly, CEO of Kelly Intelligence and Portfolio Manager of DailyDelta ETFs. Thanks for joining us.
Thanks for having me.